Hello and welcome to a CMS Forex Daily Market Recap. I'm your fundamental market analyst, Nick Nassad. Today is Thursday, May 13, 2010. Currency markets continue to sell the euro and pound in today's trading as traders and investors digested the negative implications to growth from the austerity measures that will be undertaking by debt-strapped countries in the Eurozone, those such as Greece, Spain, and Portugal, and the announcement by the incoming UK government that deficit reduction and spending cuts are a top priority in that government's agenda. Following on the heels of Spain's recent announcement, yesterday's announcement, today Portugal's government outlined details of further austerity steps, including a 2.5% tax on large companies and banks' profits, as well as cuts in government pay. Also, there will be a 1% rise in the value-added tax. We had the euro slide in overnight trading, breaking below our lows from yesterday around 1.26, and then we retested that level as resistance as we entered the New York session. As we had a late dip in New York stocks, which increased risk aversion, the euro-dollar pair fell even further, testing our lows from last Thursday, right here at the 1.2520 level. We looked almost set to break that as we entered the beginning of the Friday global session. So there just seems to be no let-up right now for the euro, and after we had the announcement of the close to $1 trillion rescue package over the weekend, all the gains there have been paired during the rest of the week. While the measures to cut spending will go some ways to reduce the strain on Eurozone bond markets and narrow credit default swap rates, it will still be picked apart as not going far enough. Meanwhile, the cuts will also be responsible for slower growth as wages are cut for public sector workers and we see higher taxes. So that pressure, as well as the inflationary implications of the bailout package, continue to pressure the euro. So we'll see if we move below our lows from Thursday in the Friday session. Similarly, the pound-dollar pair slid in favor of the greenback, as UK also faces some painful measures to reduce its deficit, as well as some skepticism about the new Conservative Liberal Democrat coalition government's resolve to actually adopt those measures. The doubts about longer-term fundamentals for the Eurozone and the UK sent investors to the safety of the US dollar in today's trading, as well as the yen and the Swiss franc. We moved below the 1.47 level, which had been our low for this week, back on Tuesday. And we had come to support around 1.4580 as our low in today's session. Here too, we looked set to perhaps test our lows from Thursday if this pressure on the pound keeps up. As we can see also, our moving average picture is quite bearish as all three moving averages are now pointing downward, and we have the short-term moving average below the medium-term moving average, which is below the long-term moving average. We also had a bit of a double top pattern, which we broke out of in today's session. The pound was also pressured by a weaker than expected trade balance report. That trade balance showed that in the month of March, we had a deficit of $7.5 billion, which was worse than expected. Imports rose by a much higher rate than exports, which caused the gap to widen. Faced off against each other, in the euro-pound pair, we saw the support from yesterday hold at 0.8450, and following our rally in New York trading yesterday, we actually extended our rally in favor of the euro, which shows that the pound has been pressured even more than the euro during the last session. Here we managed to move above first our short-term 50-period moving average in the hourly chart, and then in late New York trading we moved above both the medium and long-term moving averages. Our next resistance will come from Tuesday's high around 0.8610, and then we could look set to test the 0.8750 level, which was our high when we came back from the weekend. Also, this week we had been reporting how gold had been a very strong performer, but in today's session we saw it consolidate some of its recent gains as we moved back down to the 1,230 level as our main level of support, though we dipped below that shortly in the New York afternoon. Also, we saw oil prices slide below the $74 a barrel level. So let's take a look at one of our main commodity currency pairs, the US dollar, Canadian dollar. And we see that in today's trading session, we had tested the 1.0 120 level, but then we rebounded first in the European session and then again in late New York trading as we had stocks decline as well as oil prices decline. So we moved above our 50-period moving average and we set a new high for today's session, and we moved higher as we began the first hour of the Friday global session. The Australian dollar US dollar pair, meanwhile, rose rather sharply to start the Asian session as we had a pretty strong employment report from Australia, which helped to boost the currency. But as we moved into New York session, we slid and then retested our high one more time, which corresponded to our 200-period moving average here at the 0.9025 level. And then we slid again as we had stocks decline in the US as well as commodity prices. In this pair, we're seeing a bit of a consolidation or squeezing action as we have a downward sloping level of resistance and an upward sloping level of support if we draw it like that. And we actually test that upward sloping support level currently, and we may be set to break it if the sharp red candles continue. Now, we did have a very strong period of volatility in the previous week, so some consolidation is warranted in the pair. Now, while both Australian and Canadian economies are doing rather well for themselves, the Reserve Bank of Australia has already seemed to have run its course in terms of interest rate hikes, while the Bank of Canada is just about to set their rate tightening campaign. Also, if China continues to try and cool its economy, it would affect the Australian economy more than the Canadian one. So from a fundamental perspective, the Canadian dollar may be a more attractive currency in the coming weeks. We still have a sense of risk aversion over the global markets, so we may have to wait for commodities to begin a rally before we actually see the Canadian dollar begin to improve. Now, we do have the Australian dollar against the Canadian dollar here, and we could see that in last week's trading we had been rather flat or moving sideways, but in this week's trading we had seen the Canadian dollar gain rather strongly. So this is a very clear evidence that the Canadian dollar is favored now compared to Australian dollar in the currency markets. Now, I did say that the employment release from Australia was rather positive for the month of April. The economy expanded by 33.7 thousand jobs, which was a figure that was better than expected, plus we had an upward revision to March's total. However, the unemployment rate did rise, which suggests that more workers entered the labor force. So we're coming close to the end of the week, and let's see what releases to expect as we close out the week. Tonight we get retail sales data from New Zealand, and overnight we get the UK leading indicators. So not too much to trade on in the overnight session. Tomorrow, however, we do have some important U.S. releases, including retail sales and industrial production data, as well as consumer sentiment and business inventories. The retail sales data will be an important indication of how consumers are faring and spending, while industrial production will be a key indicator for manufacturing. So that will do it for today's broadcast. For more news, videos, and analysis, please visit our site. I want to thank you for watching and wish you good trading.